What's up guys, and welcome back to the channel. I started doing this about 2 weeks ago or about 3 weeks ago, and what I used to do is before the market opens on Sunday night, what I used to do is to go through my MT5 to look for the key trades which I'm going to be looking for that particular day, or which I'm going to be trading for that particular week. So the market is going to be opening very soon, since today is Sunday, and what I do is I go through my computer or I go through my MT5 and I spot out potential key currency pairs that I'm going to be trading for that coming week. So that analysis has helped. The comment section the videos went viral, the comment sections were very busy. People were able to look out for those same trades, people share their ideas, and together we've been able to make a lot of money. Because those same trades which I used to do the analysis, I used to take the same trades on my live account and I used to share the results. So I don't just come here and I preach, I practice what I preach. If I come here and I bring up 4 different currencies and I say, okay, this week I'm going to be looking at this currency pairs, I'm going to be doing this. All those trades that I take on those currency pairs, I'm going to share with you guys on camera. And I'm going to show you guys are going to see on a live account. It's with real money, it's not with fake money. So with that being said, the market is going to be opening soon. And these are some of the few trades, or this is my analysis that I have for the weeks and the key currency pairs that I'm going to be looking. All right, perfect. So the first currency pair, if we have to come on my screen, the first currency pair you can see on my computer is Great Britain Pound USD. This currency pair, this is I think a week before, or I think 2 weeks ago. You can see these lines are even still here. If you haven't watched the videos about this particular analysis which we did, then check the link above. Check the link above to watch this particular video, because if you watch that video, you will see these same lines. These were the trades we took last week. So these were the trades we took last week, and we made more than $2,500, almost $3,000 only on this currency pair alone. All right, and by the end of the week, the structure was broken. And remember, this is a 4-hour time frame. So by the end of the week last week, the structure was broken, and we started, instead of making higher lows, higher highs, higher lows, higher highs, the market started printing lower highs, lower low, lower highs, lower hold. That is a typical downtrend. Since I already know that, okay, this is a downtrend, what is the first rule? The first rule is I only have to be looking for sell signals. I only have to be looking for sell trade. That is the first rule. I already know very well that the market is down in a downtrend. The market is down in a downtrend. I am only looking for what? Sell signals. So if we have to come into this currency, remember this is the 4-hour time frame, and I like using the 4-hour time frame or the daily time frame because it cuts all the noise. It cuts all the noise and all the confusion and all the rowdiness I'll have with the 1 minute time frame, 4 minute time frame, or 2 minute time frame. Although the same strategies that I'm showing you guys here will work for a 1 minute time frame. The same strategies will work for a 5 minute time frame, for a 30 minute time frame. The same strategies are all price action strategies, and they work for all time frame. But the reason why I'm choosing the 4-hour time frame or the daily time frame is because it's going to filter out a lot of noise, and it's going to give me flexibility. It's going to give me a lot of flexibility to do other things, and it's also going to give me a lot of money. Perfect. So now, since I already know, since the market is already in a downtrend, and the first rule is that I only have to be trading in the direction of the trend, or I don't want to try to catch a falling knife. You know, trying to catch a falling knife is when the market is in a downtrend and you're trying to buy, or the market is in an uptrend and you're trying to sell. It's like trying to catch a falling knife. It's going to wound you. You're not going to succeed. So the first rule is here, I only have to be looking for a sell signal. And since the market has already pushed down for almost about 100 pips, there is no way I'm going to enter in this market. There's no way I'm going to sell, because at this point I can see an exhaustion coming very soon. I can see an exhaustion of this particular impulse, of this particular trend coming very soon. So what will I do now? Remember, I'm still talking about sniper entries. I'll look for a sniper entry. What I'm waiting for, if the market open, what I'm waiting for the market to do is to come back, to push back to this particular resistance. All right, I'm waiting for the market to push back to this particular resistance zone and to this particular support zone. And as soon as I push back to this particular support zone, I'm only going to be selling at that particular level. All right, so that is what I'm going to do. So that's why I'll wait for the market to push back there, and I'll only take a decision somewhere here. So I'll wait for the market to push back to this particular resistance, then I will sell at that particular level. If I'm selling somewhere here, my stop loss is going to go somewhere here at around 35 pips. and my take profit is going to be going down here at around 120 pips. That is a risk to reward of at least 1:4, of about 1:4. With a risk to reward of about 1:4, I just need to be right 3 times out of 10 times. So if I have 10 trades and I have just 3 right and 7 of them losers, I will still be making millions in Forex trading. The power of risk to reward. So I'll get this snapper entry somewhere here. My stop loss will go here. My take profit will go somewhere down here. That is if the market decides to push back. Remember, nobody knows what is going to happen in the Forex market the next minute, the next day, the next second, the next month. But we have scenarios, we have plans in place that will be able to guide us to say, okay, if the market has to do this, we'll do this. If the market has to do this, we'll do this. So if the market has to push back up, we'll be getting in at this point in time. And what if the market decides to continue pushing down? You see, what if the market decides to continue pushing down from this point? What I'll do is I'll just have to wait for the market to come back to this particular support or to this particular resistance down here and bounce back to my particular support for me to sell. I'm only looking for sell opportunities unless the structure is broken until you start seeing higher lows, higher highs, higher lows, higher highs. That is going to tell me now I'm in an uptrend. But till then, I'm only going to be looking for sell opportunities. And if the market doesn't go, if the market doesn't push down at the market open and decide to push up, and at this point in time I don't have a sell signal. If at this point in time I don't have a sell signal at this particular support, what will I do? I'll wait for the market to do what they call the break and retest, because obviously the market will break somewhere here. And 90% of the time, what will happen? The market will come back, retest, and then boom, continue going up. So can you see this structure? So if the market comes back here and I don't have a sell signal to sell somewhere here for me to ride the trend back down, and the market continue and the structure is broken and the market continue going up, I'm not just going to hurry and buy, because I don't have a confirmation yet that the structure has already been changed. But what I'll do is I'll wait for a confirmation of a retest, a break and retest. This zone has been broken. Now I wait for the zone to test. That's what I'm saying, break and retest, the break and retest strategy. So since this zone has been broken, I'll wait for the same zone to retest. As soon as the same zone retests, I'll only be looking for a buy signal somewhere here. And what betime me, I get a buy signal somewhere here. Because now, at that point in time, you see the market will already be making higher lows, higher lows, higher heights, higher lows, higher heights. A confirmation that the market is in an uptrend, and I can then at that particular point in time ride the trend with confidence, trade with confidence. All right. So that is my plan for Great Britain Pound USD. Let's go to another pair, which is gold. Let's go to EURUSD. EURUSD, I don't really have much I'm watching on this particular currency pair, but another one which I've been watching since the 9th of August. You can see since the 9th of August 2021 is gold. All right, it's gold. And at this point in time, immediately this same trend line, this same support zone was tested about a month ago. That was on the 16th of May. I took the first trade here and I made almost about 400 pips. I think that trade I shared with you guys on the channel. See, after I made that 200, after I made that 400 pips, you can see the market won't just, when you press buy, the market doesn't just go boom and hit your take profit, right? The market doesn't just go like that and hit. The market breathe out and breathe in, breathe out and breathe, extend and contract, extend and contract. So after this extension, there's a big contraction and the market is beginning to extend again. But I'm foreseeing that the market, this particular currency or this particular currency pair has the potential to come back to this particular support zone. That is what I'm seeing. That is what I'm seeing. So at this point in time, I have two scenarios. Let's start with a scenario where the market open and the market is open and the price continue pushing down. If the market is open and the price continue pushing down, this is what I'm going to do. I'm going to wait for the price to push back, to come back to my support zone, and boom, I'm going to look for a buy signal and a buy at my support. And at that point in time, I'm going to be having a good risk to reward. I'm going to be having a snapper entry, and if I'm buying somewhere here, I'll be going for a risk to reward of at least 1:4. 1:3, 1:4. At the end of the day, I will still be making money. So that is a scenario where the market is open and the price decides to push down. What if the market is open and the price decides to continue going up? Because that can happen. That's why we're planning. We're planning in both scenarios. Nobody knows what is going to happen. That's why I have my plan on both scenarios to say, okay, whatsoever direction the market chooses to go, I already have a plan in place. Good. That is how professional forex traders trade, because you already predefine your risks and you've already pre-conceptualized the trade before the trade even happens. Good. So now if the market open and good, the market continue pushing up without coming back to my support zone, what will I do? I'll wait for the market to extend. I'll wait for the market to extend for almost about, let's just say for almost about 200 or 300 pips. And as soon as I see the structure start dying off, that is when I can bring my Fibonacci. That's the only tool I use. You guys know I don't use indicators. I don't use indicators in trading. So another tool I can be able to use to look for where the market is losing strength, I can use my Fibonacci extension to have an idea of where the market can extend. And when I've gotten that Fibonacci extension, I can then use the Fibonacci retracement to look for a retracement, to look for a 50% level. There's already a video about the Fibonacci which I did on the channel, and that video is almost about an hour long. So you can always go back and watch this video so that you can understand the Fibonacci to a fingertip, because this is the most powerful tool I can say when it comes to price action trade, or a very important tool. That is, if the market decides to continue going up, then after a particular extension, I'll bring in my Fibonacci retracement and I'll be able to tell me, I'll wait for the market to retrace back to the 50% level or the 38.2% level, and I'll be buying at that point in time. So you see, that is still going to help me to have what they call a sniper entry. Let's check another key currency pair which I was waiting for this. I traded this currency pair. I traded this move with my robot, with my Petrex Pro robot. I made almost about, I think that was almost about $20-something thousand from a $1,000 account. With this move alone, I remember very well, because the robot was always selling. I already programmed, because you can see this support and this resistance. Immediately the market got to this resistance, I brought in my robot and I told my robot, you only have to be buying. You only have to be selling, sorry. I told my robot, you only have to be selling. And the robot was always selling. The robot, and this move from year to year of almost about 400 and something pips, I got out at around 350 pips. And remember, the robot was performing what? It was performing on a lower time frame, which was a 5-minute time frame. So just imagine how many 5-minute candles I'm going to have here, or how many trades. I had more than 2,000 trades, and at the end of the day, I came out with more than $25,000. All right, I'm going to do more robotic, because I shared most of my robotic trading, and you guys were so excited. It was so exciting. It was so nice to watch, and I'm going to be sharing most of my robotic trading with you guys again, so that you guys can just have fun with it. You guys can just see how it performs. Even though I've taught you guys again from A to Z how you can be able to program a robot to mimic the same idea in your brain. Good. That is that. Remember, trading is having different strategies or different styles. You have robotic trading, price action trading, and fundamental trading. The strategies which we're covering on this video are directly price action. These are price action strategies. So don't confuse them with robotic strategies, and don't confuse them with fundamental strategies. So this particular currency pair, Great Britain Pound AUD, I have been monitoring this currency pair since last week, and you can see the currency pair is bouncing on support and resistance. Currently, we have the price here. Very soon, just about 130 pips, we're going to be heading back to this particular support. So my plan is, if the market opens and the price has to push back to this level, hallelujah, I'll be looking for a buy signal at this key support. This is a key support right from the 31st of March. From the 31st of March, almost 3 months, this is a key support. So if the market has to push down there, which is just about 100 pips to that particular support, I will be buying somewhere here, and hallelujah, my risk is I'm just going to be risking about 50 pips, and I'll be going for about 300 pips. Can you see this? I'm risking just 50 pips and I'm going for 300 pips. That is the risk to reward of 1:6. With the risk to reward of 1:6, out of 10 trades, if you have just 2 right, just 2 trades, the rest 8 of them are losers. You have just 2 right, you will still be making money in forex trading. You see, so now if the market can push back down here and I have this sniper entry at this point, I'll be risking just about 50 pips to go for about 400 pips, or to go for about 300 pips. That is the risk to reward of 1:3. And remember, when I'm targeting, when I have a risk to reward of about 1:4, I don't just buy and just allow the trade to just be like that. No, I trade my stop. If the market has already, let's just say if I'm targeting 300 pips, if the market has gone in my favor for 2 arrow, remember my arrow is my risk, which is 50 pips. If the market has gone in my favor for 2 arrow, which is going to be 100 pips, I remove my stop loss from what? From the stop loss level, and I put at break even. Now it's a risk-free trade. If the market goes up again to 3 arrow, which is now, I'm in the trade now for plus 150 pips, what will I do? I take my stop loss from the entry point, and I block in 1 arrow. I block in 1 arrow, which is going to be 50 pips. So the distance between my stop loss and the current price level is always going to be what? About 2 arrow. It's always going to be 2 arrow, which is 2 times my stop. So the distance between my stop loss and my take profit, or my stop loss and the entry price, is always going to be 100 pips. So in that case, I am giving my trade enough room to breathe. I am giving my trade enough room to breathe. So that is that about Great Britain Pound AUD. All right, if the market continues to push down. Now, what if the market doesn't push down at this point in time? Remember, I always like to have 2 scenarios. If the market decides, if the market opens and this continues pushing up, good. I'll wait for the market to push up a little bit. Then, if the market push up a little bit and just continue, if the market push up right to this particular support, I'll just look to sell again. I'll just look to sell somewhere there. But in between the way, remember, I'm only going to be looking to sell at this particular resistance level or buy at this particular support. In between, I don't plan on taking any trade. I only plan in managing my trade in between. That is the plan I have. So if the market open and the price continue pushing up, I'll wait for the market to come back to this key resistance level, and I'll be looking to sell somewhere. At this particular resistance. But you then, so long as the market is still where it is, I'm waiting and I'm hoping it pushed back down to this key support so that I can buy. But if it doesn't push and continue going out, I'll just wait for a couple of days for it to go back to the key resistance, and I'll be looking to sell at that resistance. So that is that about Great Britain Pound AUD. And then Great Britain Pound JPY is almost the same thing. This is a trade which we also made. You can see the line is still there, guys. This is not magic. This is what I did. This is what we did last week. With the market, by the time the market opened, we were planning for the market to push back down here and we buy. And the market did just that. The market pushed back right back down here. I bought somewhere here. My stop loss was around 150 pips, and I was targeting 400 pips. I've already been out of the trade ever since. Out of the trade, I was already out with 400 pips, and see the market is already pushing up. So what is my plan? My plan is simple. You can see that is the same line. If the market open and it continue pushing down, I'll wait for the market to come down to my support, and I buy somewhere here. Or if it continues going up, I'll just wait for the market to go up, give me another impulse, then I'll buy at that particular impulse. You see, I already know that this particular market is in an uptrend. What is the rule? If so long as I already know this particular market is in an uptrend, I am only looking for what? Buy trade. If it was in a downtrend, I would have only been looking for what? Sell trades. As simple as that. So that is the plan. If the market has to push down, I'll wait to enter somewhere here. If it has to push up, I'll wait for the market to extend, give me an impulse, then I enter after that particular impulse or after that particular retracement. With that being said, guys, you see how trading becomes very stress-free. Trading becomes very, very simple. The same thing goes for what? This structure was already broken on Great Britain Pound NZD. This one is very, very clear on Great Britain Pound NZD. If the market open, I'm just doing what we call what? I'll be waiting for what we call a break and retest, because you see, the support is already broken, and my support, I'm hoping since my support is already broken, it might become a resistance. So what will I do? I'm waiting for a break and retest. I'm waiting for that line to be tested. As soon as the line is tested, I'm waiting to sell. That is what they call the break and retest. So Great Britain Pound NZD has already broken the structure on a daily time frame, and I'm just praying and hoping it comes back to test that particular support zone, and I'm going to be buying, because at that particular point, the support is going to become the resistance, which is what we call this change in structure. So that is that about Great Britain Pound NZD. Then let's go to the last currency pair, which is CADJPY. See what happened last week. this happens all the time. This structure was broken last week, and since then, I think we were only, since the market was already making higher highs, higher lows, higher highs, higher lows, we've been killing it, and we've only been buying, we've only been looking for buy opportunities. So at this point in time, I'm just going to wait on CADJPY to see how the structure is going to turn out at the market open before I can make any decision. So with that being said, guys, those were the key trades. The same thing happens if you can check my Euro AUD. I have the same structure on Euro AUD. So at the market open, I already have a trade that I'm going to take. I'm going to be taking this particular trade on Euro USD. I don't even need any confirmation. You can see the market was bouncing on what? Support and resistance. And I already have a clear indication what is the direction of the market. The direction of the market is an uptrend. The market is giving me higher lows, higher highs, higher lows, higher highs. Clear uptrend. You can see the market is bouncing here. So now the market is already on my support, and what do I have? A full engulfing candle or a bullish engulfing candle. Anytime I have a bullish engulfing candle at a key support, that is a bullish signal, or that is a buy signal. So I'm just going to buy here at the market open. My stop loss is going to go somewhere here at 100 pips. So my stop loss is going to go somewhere here at 120 pips, and I'm going to be targeting 300 pips. That is a risk to reward of about 1:3. So that is the trade I'm going to be taking at the market open. Whether the market has to jump up or down, I'm taking this trade, and I'll still share this trade as soon as, even if it comes out to be loser or winner, I'm still going to be able to share the trade with you guys so that you see the power of you knowing what you are doing, the power of you understanding market structures, understanding price action, and understanding how the price actually forms out. So with that being said, we've come to the end of this video. If you want to be able to watch more price action strategies or more price action videos or more live videos, make sure you check the links, or make sure you check the videos that are going to be coming at the end of the screen, because all those videos are related to live trading, to price action trading, so that you guys can be able to copy the same thing. If you want to be able to join my inner circle, or be my private student, or be in my private mentee, or take a Forex course that will teach you from A to Z, then check out Godlove University on the video description. There you also have access to my private community, private Forex traders who are sharing ideas on the daily basis, mentored by me. If you want to use the same broker I use, the same recommended Forex broker which I use, that will allow you to be able to trade like this with confidence, then check the links on the video description. If you're watching my channel and you haven't subscribed, guys, make sure you hit the subscribe button below to subscribe to the channel. Smash the like button on this video if you haven't liked the video. Until then, I'll see you guys on the next